Let's talk about the other big story, right, which is sort of strategic investors, PEs, long-term investors selling in many companies here. We've seen that sort of trend for the last 1.5 years or so. Actually, since January of 2023, promoters, PEs, large shareholders have sold some $21 billion and have raised $100+ billion through debt issuances. Let's talk about this in some more detail. We're now joined by we have Raj Balakrishnan, Managing Director and Co-Head, Investment Banking at Bank of America. Raj, great to have you with us here. Good morning. Thanks very much for your time. I want to, of course, first of all, say congratulations. You guys were one of the two bankers in the ITC deal which happened. And it was a long-standing overhang. Some of it is gone. But can we say it is gone with regards to ITC? Because BAT still owns about 25%. So what could be the roadmap ahead? I mean, if you can share, because you would have been in touch with both sides. What's the thought process really? Should one watch out for buyback announcements?
BAT has put out a public release saying that they intend to hold their 25.5% stake for the foreseeable future. So I don't think I can say anything more than that.
Okay. All right. No, fair enough. But, okay, let's just talk about the reason then, right? It's not just ITC. We've had announcements come through from Timken. We had Whirlpool earlier. Could you talk to us about what is the underlying motivation for many of these stake sales? We actually had the Whirlpool global CEO come out and say in so many words that it just is a valuation arbitrage. Sell stock here in India and buy the parent company stock, which is available much cheaper. Do you think that is a primary driver?
India businesses of many multinationals are growing very, very rapidly. And as a result, I think the Indian market, rightly in my view, rewards these companies with extremely high multiples. Now, very often, this underlying value of the Indian business is not reflected fully in the value of the parent stock. And so from that perspective, as a corporate finance practitioner, it makes immense sense for some of these multinationals to evaluate monetizing part of the stake in the India business and using that as a tool for funding their operations or opportunities in other parts of the world, whether it's buybacks or other investments that they wish to make. So from that perspective, I think it makes immense sense and reflects the coming of age of the Indian market. And I think people are willing to take a call that, as long as, for example, if you're between 51 and 75%, it does not really make a difference in terms of control. You're a listed company, you have a majority. Or if you're between 25 and 50%, once again, does not make a difference in terms of control. So from that perspective, taking some chips off the table does seem to make sense.
Raj, is there any signaling effect from some of these actions for local investors, or there is none? That, large owners are...
I think it's just reflective of the difference in the growth opportunities between the Indian market and what you're seeing elsewhere in the world. The fact is that I think everyone is very positive about India, about the trajectory of the Indian economy, the fact that, and I think our markets very clearly reflect that in terms of the multiples, which price in probably sustained high teens to maybe even 20s growth over the next decade or two. When the same is not reflected in the parent stock price, it makes sense for people to take some money off the table.
Okay. Raj, hi, good morning. I have many questions for you. But first, just to finish the loop on this one, right? Does this also mean, because it was a large deal that took place, $2 billion, and it just speaks about the volumes in the market, the appetite, and it also speaks about the depth of the Indian market. Would you concur that the depth of the market is improving and that is perhaps a positive signal as well?
No, I agree fully. And I think, to see a $2 billion trade, this is the third largest ever block deal in the Indian market. And it got executed in the block trade window, which is, at a less than 1% discount. So it's the largest ever deal in the block trade window. Last year, we had done $400 million trade in the block trade window and felt very proud of that. And now we've been able to execute a trade which was 5 times as large. So certainly reflects the coming of age of the Indian market, as I said.
Absolutely. Just one more follow-up. Since you've been tracking this, you've been in this M&A ecosystem for so many years. What we're noticing now in spaces like pharmaceuticals is that there are a few MNCs that are looking to exit India. How do you read the kind of M&A trends, particularly in the pharmaceutical space?
I don't know if people are looking to exit India. I think once again, just about any company at every point in time takes appropriate decisions in terms of what is the focus area. So you could have a company, for example, which decides that their focus area is, if you're talking about the pharma sector, for a multinational, they might decide that the focus area that they have is on patented medicines. And very often those are, in the case of Indian subsidiaries, and 100% owned Indian subsidiaries. And they might decide, some of the older generic brands that exist in their Indian listed entities are no longer a focus area. So people might evaluate the possibility of trying to see what's the kind of valuation they would get should they wish to exit that. But I don't see a generic trend that multinationals are looking to exit India. I think what people are trying to do is optimize their portfolios from a strategic perspective.
All right. Hi, Raj. Good morning and good to hear your thoughts. Nigel on this side. Well, I wanted to ask you about the consolidation trends. We've seen in media there's been some consolidation that took place and that was long awaited. How do you see trends shaping up? Case in point being maybe the cement space. We've been hearing about consolidation. We've seen a fair bit of action and that could be more in store. Your take?
No, I agree. I think in just about, the Indian market presents tremendous opportunities. And I think what we've also seen is, let's say 10 or 15 years ago, virtually every trade you thought of was an Indian selling and a multinational buying. But with the coming of age of Indian companies and the availability of capital that exists for Indian companies, now you're seeing a number of trades where you have Indians buying or private equity sponsors buying, and in some cases multinational selling, in some other cases Indians strategic selling. So I think it reflects, the M&A market in India today is no longer unidimensional, but is multidimensional, with each and every company taking calls based on their own strategy and portfolio choices in terms of what they want to do.
Raj, just a little bit of here and now. Do you think with a little bit of shakeout we've seen in broader markets, the pace of sort of QIPs and IPOs perhaps will slow down a little bit? Ps and VCs, etc., may continue to sort of monetize as we've been seeing. Would you agree with that?
No, I would disagree with that. I actually think that, for example, last year, we saw a large number of IPOs, but they were relatively small IPOs. So the total amount of funds raised through IPOs was relatively low. We had only 4 trades last year of more than $300 million. On the other hand, I think this year is going to see many more larger IPOs. And I would expect the total funds raised through IPOs this year to be significantly more than last year. Similarly, in terms of QIPs, last year was a great year for QIPs as well as for block trades. And I think I continue to see that trend continuing this year.
A lot of it obviously is also underlying market conditions, right? So in a way, Raj, you're also sort of saying that we should move past this current phase of volatility and a bit of drawdown that we've seen.
Yeah, I think you'll focus excessively on what's happened in the last 3 days or last week. Frankly speaking, if you look at the Indian market, be it on a 3-month basis or 1-year basis or 5-year basis or 10-year basis. It's delivered returns superior to virtually every market in the world. Even on a dollar-adjusted basis over the last decade, barring the US market, we are probably the best performing market in the world. So the fact is that the Indian economy is looking good, Indian markets are looking good. And, you know, a phase of if there's a correction for a week or two or even a couple of months, I don't think that changes the underlying trend.
No, I completely agree. But we also talk excessively about the short term because we talk every day. So there is that element to it. But we also, I can assure you, talk about the longer term returns. And we do that. That point about, I mean, actually over a 20-year period, I think the returns absolutely stand out compared to the rest of the globe. Just on that second part of my question, do you think this PE and VCs selling, we've kind of reached a bit of a high and it should taper off from here? Or what's the pipeline looking? Because you would have a bird's eye view.
If you just look at, you know, the sheer volume of investment over the last 5 years from the PE and VC community in India, it has been tremendous, right? Several billion dollars of investment coming into India every year. And as you know, a number of these funds have a defined life and look to exit, say, in a 4 to 6 year kind of time frame. So I do think you will see several examples where investors look to realize the gains that they've made and return money to their principals or LPs. But at the same time, I think you will see newer PE and VC funds looking to make fresh investments in India. So this is part of the natural trend in markets. So I would not see that as either positive or negative for India. The fact is that at this point in time, for virtually any PE fund, India is a key focus area. And just because they realize investments that they made 4 or 5 years ago, it does not mean they're not going to make investments from the fresh funds that they have raised more recently and deploy them significantly in India.
All right, we'll let you go on that note. Thanks a lot for joining in and giving us your perspective on all the M&A activity that has happened in the market in the last many weeks and months. But by the